Hello and welcome. If you're self-employed or have any income that isn't from a regular payroll, you've probably felt that painful sting of a self-assessment tax bill that's way higher than you expected. So, what on earth is going on? Well, to help us all understand, we've brought in the experts from my tax accountant to put together this really clear guide for the 2025/26 tax year.
Right, let's set the scene. You've logged into your HMRC account, you click to see your tax calculation, and your jaw just hits the floor. Does that sound a little too familiar? Yeah, that feeling of pure shock is exactly what we're going to talk about today.
You see a number like this flashing on your screen, and your mind just races, right? How did it get so high? Wait, did I do something wrong? Surely this has to be a mistake. Okay, first things first, take a deep breath. You are absolutely not alone. This is happening to millions of people all across the UK. So let's pull back the curtain together and break down exactly what's behind these rising tax bills.
So, here's our roadmap. We're going to start with the big picture, this invisible squeeze that's affecting pretty much everyone. Then we'll dive into some hidden traps, especially for higher earners. We'll also look at whether you're accidentally leaving money on the table, see what's coming around the corner, and finally, map out a path to get some clarity on all of this. All right, let's get into the number one reason your tax bill is probably climbing. It's a little something called fiscal drag. You might hear it called a stealth tax, and that's because it quietly takes more of your money without the government ever having to announce they're putting the tax rates up. Sneaky, right?
So how does this actually work? Well, it's pretty simple. The government has basically frozen the income levels where you start paying different rates of tax. But your wages are hopefully still going up, even if it's just to keep pace with the cost of living. This means that pay rise is pushing more and more of your hard-earned cash over those frozen lines into a higher tax bracket.
And this chart, wow, it shows you the staggering real-world impact. Because these tax thresholds are frozen for the foreseeable future, look at this. The number of people paying higher rate tax is set to rocket from about 5.3 million just a few years ago to a projected 8.1 million this year. That's nearly 3 million more people paying 40% tax on some of their earnings, many of whom have simply been pushed over a line that hasn't moved an inch.
And when you look at the bands here, you can really see it. That tax-free personal allowance of £12,570, it's been stuck there for years. So as your income creeps up, it doesn't take much for it to spill over from the lovely 0% band into the 20% band, and now, for a huge number of us, right into that 40% higher rate band.
Now that fiscal drag thing gets almost everybody. But if you're a higher earner, there are some other specific tripwires you really need to be aware of. They can trigger some seriously nasty tax charges. And stay with me here. The next point might really surprise you.
Okay, first up is something that isn't actually an official tax rate you'll see written down anywhere. But believe me, if you fall into it, it feels very, very real. It's known as the 60% effective tax rate trap, and it catches people who earn over £100,000. So here's the painful mechanism. The second your income tips over that £100,000 mark, your tax-free personal allowance, it starts to evaporate. For every £2 you earn over the limit, you lose £1 of your allowance. And by the time your income hits £125,140, poof, it's completely gone. It's this double whammy of paying 40% tax and losing your tax-free allowance that creates this absolutely punishing 60% effective rate on that chunk of your earnings.
Let's make this real.
Imagine Anya, a freelance marketing consultant based in London. The year her income tipped just over that £100,000 threshold, she got a horrible shock on her tax bill. And this shows you why. Earn just under the limit and you keep your full tax-free allowance. Earn a bit more and it vanishes completely, meaning you pay tax on every single pound you bring in.
But, and this is a really important but, you are not powerless against this. With some smart planning, you can navigate around it. Here's a pro tip. The most common way to do this is by increasing your pension contributions. This can lower what HMRC calls your adjusted net income, and if you can get that number back under £100,000, you reclaim your full personal allowance and sidestep that 60% trap entirely.
Now let's look at another trap, and this one hits families right where it hurts. But that's not all. Here's where most people go wrong. If you or your partner earn over a certain amount and you're claiming child benefit, you could be facing an extra tax charge. The key number to burn into your memory here is £60,000. If either you or your partner has an income over this amount, you start having to repay the child benefit you receive. It works on a sliding scale, so by the time your income hits £80,000, you have to repay the entire amount through your tax bill, which completely wipes out the benefit.
Okay, so we've looked at the big systemic issues that are pushing our bills up,
But what about the things that are directly in your control? The truth is, loads of people overpay tax simply because they're not claiming the allowances and reliefs they are fully entitled to.
Let's do a quick fire round. Are you using these? The marriage allowance? How about the trading and property allowances? That's £1,000 tax-free for a side hustle or some rental income. What about your savings and dividend allowances? Each one of these is a legitimate way to reduce your tax bill. Every single one you miss is basically just leaving money on the table for HMRC. And for all you self-employed people, freelancers, and business owners, this slide is absolutely crucial. Think about your costs. A portion of your home bills for your office, your mileage and travel, subscriptions, software, insurance, and yes, even your accountancy fees. Every single legitimate business expense you forget to claim means your profit is higher than it should be, and you are voluntarily paying more tax than you need to.
And here's a massive one. This catches so many people out. Did you know this? When you pay into a personal pension, your provider automatically claims 20% tax relief for you. But if you're a 40% taxpayer, you're due another 20% back. And HMRC will not just give it to you. You physically have to go onto your self-assessment return and claim it yourself.
And just when you think you finally got your head around all this, guess what? The goalposts are set to move again. So it's really important to know what's coming down the track so you can plan for it. Okay, so a quick heads up on some changes that have already been announced. From April 2026, the tax you pay on dividends is scheduled to increase. Looking even further ahead to April 2027, the rates on both savings interest and property income are also set to go up. The bottom line is, the squeeze looks set to continue, which just makes planning ahead even more critical. So let's bring all this together. What does it all mean? Well, it means the tax system is incredibly complex, and it's always changing. Between fiscal drag, all these hidden traps, and future rate rises, trying to figure this all out by yourself can be a really costly mistake. Now, it's really important that we're clear about this before we finish. Everything we've talked about today is for general guidance. It's not a substitute for professional advice. For help that's tailored to your unique personal and business situation, you really must speak to a professional tax expert. And that's where the experts at My Tax Accountant come in. They can give you that professional, expert help to understand your tax bill properly, make sure you're claiming every single thing you're entitled to, and help you plan effectively for the future. You can call them on 0208-570-8531 or email them at info@mytaxaccountant.co.uk. And if you want to dive even deeper into all the points we've covered today, you can read the full, detailed guide over on the My Tax Accountant blog. The address is right there on your screen.
And finally, if this has been useful and helped clear things up a bit, please think about subscribing to the channel. It's honestly the best way to make sure you don't miss out on our future guides to making sense of your taxes. Thanks so much for watching.